Everyone, Maurice, and welcome to Things Invest, where we talk about investing, finance, and professional development. For today's video, entertainment purposes only. The investment I'm going to talk about today would be Ethereum, ticker ETH. With respect to the news that we heard recently last night or sometime this morning, depending on when you watch the news, one of the Federal Reserve representative, Harker, has announced that internally within the Federal Reserve and the central bank, they're currently discussing the tapering timeline going forward for the US economy. So what tapering really means on a layman term perspective, right? It's basically by definition the slowing of asset purchase from the central bank, right? And what that really means theoretically is the exact reversal of something that you call as quantitative easing, right? Basically stimulations of cash injections or liquidity into the market for corporations and for us residents of the country, right? Which is the reason how we were able to get the stimulus checks, which is the reasons why the stock market has been able to sustain despite the whole detriment from the COVID situation that we've been enduring for the year and a half so far, right? And the reason for doing that is to pull back on the depreciating value that we are currently experiencing for the US dollar, right? And to do that is to, basically bring the value of the dollars to go back up as we are indicating or foreshadowing the recovery of the economy going forward. So on a macro perspective, that's a good sign. However, to the equity market, on a short-term perspective, investment sentiments might be hindered because of the fact that there's a cutoff of circulations of dollars or liquidity among corporations, which subsequently could hinder the top line and the circulations for investors like you and I to inject into the stock market subsequently. However, with respect to the cryptocurrencies market, because of the exact reason for the depreciation of the dollars, and also with respect to inflation scares, people are fleeing more towards the safe haven of the world, right? Like the gold as a form of investment, like cryptocurrency, which is a form of investment, right? Which is the reasons why you see that across the equity market is down today, but the cryptocurrencies market is propelled up today, okay? And as of right now, Ethereum is up about 2.5%. So I'm gonna go through a technical analysis to see what I would see, the price point for Ethereum to going forward from here, what the resistance level you should be looking at in case you want to further dot cost average or want to buy for the first time, and my price target for year 2021 as well. So stay tuned, stick around, let's make some money. Alright, so moving on to the technical analysis for Ethereum real quick. Look at a more of a historical level, look at a daily perspective right now, you could see that historically starting on April 24th, we had that huge pump all the way up to the from the $2,150 level all the way to the $4,400 level, and this was mainly driven by the Coinbase IPO and also with respect to the SNL debuts that Elon Musk has performed for us on that subsequent weekend, right? And with respect to the balloon pop, how it drove the sell off is really because of that exact reason, the whole SNL debut that Elon Musk has, gave us his depiction around like the utilizations of Dogecoin, and the poor depictions of, just the investment sentiments around cryptocurrencies as a viable options going forward, right? And also on top of that, around this time of the year, we also got a lot of negative media affectations around from the Chinese government on potentially limiting the utilization or restricting or putting a lot of compliance pressures around the utilizations of cryptocurrencies overseas, right? We subsequently drove more of a sell-off because people don't like to be constrained. Basically it's counterintuitive to be investing into cryptocurrencies when the point and the mantra of cryptocurrencies to be decentralized, not to be centralized or be controlled by the governments, right? We subsequently drove more of like a counter pressure down all the way to, at one point, dip all the way to the $1,800 level, the 1750 to be more exact. And subsequent to that, we bounced back up because of the fact that how it dragged down the MACD completely. You could see how it deter the pressure and the supply and demand dynamics completely. We're also way submerged below the waterline at that point, which subsequently drove this mega green candle to bounce back all the way up to the 3,006 level at one point, right? And ever since then, we kind of been hovering back and forth, on a seismic perspective, mainly driven by a lot of the negative media affectation that we've been getting on a bi-weekly basis, and we've just been kind of bouncing up and down around these walls right now. At the lowest about like the $2,100, which is like psychological resistance level that we've formed way below, and before the whole rally that we have experienced so far. So we'll be just kind of bouncing up on the low about like the 2,100 to the top of the 2,900, right? And we'll be just kind of hovering on a sideways fashion right now. And with respect to the current level, currently as we are talking right now, we are trading around like the $2,800 level. And some people might ask, like, is this a good time for us to buy right now because of this whole macroeconomic shift that we're seeing going forward? I would say the answer would be, a short no. The reason I'm saying this is because this macro sentiment with respect to the quantitative easing or the quantitative tightening, if you may, the tapering, is a relatively short fuse, in terms of the asset allocations among the equity market to, to the cryptocurrencies market. And with respect to the substantive level of the supply and demand dynamics that you see here, you could see that the level of resistance is forming more consolidatedly in a based on how we're trending right now. So the resistance level of the 2,915, which we have tested once, we have kind of tested this subliminally, on the 20th of May. However, historically, we never really have any major substance around this, right? So I would say today is just more like a pump type of scheme because of the people just fleeing to the safe haven type of mentality. However, I do see more of a sell-off as people realizing that the tapering, it might take a little bit of time. They announce it on a foreshadow perspective, but it doesn't mean that they're gonna execute that like right away, right? Because it takes time for the purchasing to be occur. It needs to go through approval. It needs to go through that in a more of a gradual fashion rather than just a immediate fashion, right? And however, in a more of a relative perspective, investors, and I would say majority of investors typically have that quick gain type of mentality, right? Most people are typically trading based on emotions or based on how that is going to be affecting their balance on a short-term perspective rather than thinking on a long-term perspective, right? So I think people are going to run out of patience eventually, that we're going to sell back down to the level of the, again, right, the $2,450 level, which is a firm psychological resistance level that we've formed quite some time historically, right? And then slowly bounce back upward, right? So we're going to just continue to trade sideways from here, right? So look at a MACD perspective, you can see that we're slowly crossing upward, which makes sense, right? Because the true resistance level, is basically right now, but we did break that, right? And you could see that there's a possibility that we could go up to the $2,915 and then slowly come back down, right? So in the near term, I do see some of a positive pressure going forward, propelling upward, but do I advise buying it at this moment right now? I would say no, because again, right, just because of the psychological perspective from investors, like typically they are impatient, and very few people can actually sustain that long-term investment mindset and that perspective, right? And also on top of that, Ethereum is such a volatile assets that people might get shaken off quite easily, which the chart really speaks for itself, right? We haven't really sustained these level for a long time, right? We have sustained this once, twice, and I wouldn't even call this a sustainability consolidation level at this point on May 1st, right? It was just basically a green up in a way without any further consolidation level. So we only tested twice. So again, like this translates into a very non-substantive consolidation level, which for me, increases the risk significantly more in a risk-reward ratio perspective, right? So I don't recommend buying it now. I do foresee a dip coming soon, despite the RSI, and the MACDs, crossing upward. I do foresee some sort of like a small pump going forward, but I don't foresee the pump going to be going all the way back up to the all-time high again, because that will be very unlikely. So the prediction that I have here is basically going up to the $2,900 and then subsequently come back down as we see a MACD crossing back downwards. And by that point, when we get back to the 2,450, or at the worst, the $2,200 or $2,100 level, which is the lowest at the bottom, which we have tested multiple times, that we will be bouncing back up again. So I will see more of like a zigzag sideways type of trade going forward, contingent on more positive media affectation and more news around the adoptions and utilizations for Ethereum going forward, and also with respect to the evolutions of the 2.0 technology that we should be foreshadowing as well. So those are still catalysts that we need to look out for, and also another catalyst that we need to look out for in the next 13 days will be the CPI report that we'll be getting so far. So that might have another drag pressure, or it could be positive or negative depending on how the investment sentiment is going to be around. So my prediction is that if the CPI report was a positive one, right, the equity market will subsequently go up, but that will also have a negative correlations to the cryptocurrencies market, that people will technically flee away or liquidate part of their cryptocurrencies to to buy the recovery stocks as a form of a hedge, right? However, if there's a more of a negative CPI report, it will be the other way around. The cryptocurrencies market will subsequently propel up, while the crypto equity market will subsequently go back down. So it's kind of like they have like a negative correlation relationship between crypto and between equity market. So that's something to look out for in the near term. But right now, do I advise buying it at this moment? I would say no. And I definitely don't advise like chasing the gains ever. I always advise on buying it at the lows when the risk is relatively low, with the right resistance level to buy in for $2 cost average for long-term gains going forward. All right, so just to recap on all the numbers that we just talked about again, right? With respect to the current price level that we're trading at the $2,750 level, again, right, that was driven by the pump that they're experiencing right now. People are fleeing to the safe haven from the equity market because, again, right, for the Fed tapering that we just talked about earlier today, right? And with respect to the fair level for us to get in, in a more of a swing trade or long-term dollar cost average perspective, I think the $2,450 level, that's a great entry price point for you to get into. And if we get down even more because of negative sentiments around the foreshadowing CPI report that we'll be getting, or if we get like more of a reverse news on the tapering, that we might go back to the quantitative easing again, which I foresee that to be unlikely, or any negative news around like utilizations or adoptions for Ethereum going forward, right? We might get down to like the $2,100 level on a short-term perspective and subsequently bounce back up, because for us to get to those levels, it will require a relatively seismic, supply and demand type of shift for us to get to this level, right? And with respect to like the 1750, I think the likelihood of us like getting there in the next couple of weeks would be very unlikely. But if that's the level that we get to because of the black swan events that no one can predict, that will be an amazing price point for you to get in. And I hope that Coinbase again will come through when we get to these levels, or if even get to these levels, right? But I don't foresee that to be happening in the near future or in the near term based on how the setup of the chart looks like right now. And with respect to my 12 months target, I still sustain my $9,800 price point with a 20% of corporate adoptions. And I think I'm still relatively conservative at this level. I think we have a much more possibility of going upward from here, right? Because my assumption is really only including the large corporations that's saying the balance sheets of at least 500 million in cash, right? And does not include the small enterprise, does not include like the retail investors like you and I, which also have some market power to have that drag effect, right? So I think I'm still relatively conservative, but if we're staying conservative at the low case, right, 4 times your money buying at this level would be a relatively good gains from here. And I think the logics makes sense for us to further grow to these levels in the subsequent days and subsequent years going forward. Alright, so that's it for today with respect to my technical analysis on Ethereum ticker ETH. Hopefully this gives you a peace of mind and also better clarity and transparencies around the fluctuations that we're experiencing, both on the equity side and how that correlates with the cryptocurrency side as well. Please hit the like button and also the subscribe button and also the bell notification, and watch out for the next video coming up. Take care. Bye.